Welcome back to Business Talk here on businesstech.co.za. As always, I'm your host, Michael Avery, and today we're joined by a man who's no stranger to building things from the ground up, Michael Summerton, who is head of the INN8 investment platforms proposition team, which sits separately to INN8, one of the country's largest DFMs. That's a discretionary fund manager. Michael's career is really a blend of sharp financial skills and an analytical mindset with just a dash of New York hustle, thanks to his stint at EY's Global Exchange program. And he's been part of this since its inception back in 2018. So if there's anyone who can talk us through how investments are changing in the modern workplace through the pre-COVID and COVID and post-COVID period, it's certainly Michael. Michael, great to have you with us today. Just on that note of the modern workplace, I often say we're not working from home. We're actually living at work. That's the way it feels at the moment. So the shift to remote and hybrid work, how has it then changed or influenced investor behaviors in your view, that we've become more kind of digitally socialized?
Yeah, great question. And thanks so much for that kind introduction, Mike. This trend of hybrid or remote working, and particularly since the experience of being locked down during COVID, I think many people have reevaluated what their quality of life really means, and increasingly are placing value on experiences over possessions. And that's in the short and medium term. So things like travel, which we've seen really boom post-COVID, as well as previously 30 years ago, maybe you would have bought a new shiny new vehicle once you got your first job, or a starter home. People are choosing to save that money and perhaps spend 3 months in Bali, finding themselves, or seeking meaning over the mundane. Perhaps they're investing in their education, furthering that ability to earn discretionary income. And we're seeing people, increasingly saving for the longer term. And perhaps during COVID, it prompted them to reevaluate some of their life decisions and really wonder, like, what's life going to be like for me once I sort of work less in the corporate world, for example.
Now, that's something that I'm certainly experiencing as an individual. We're off to Dublin next week for 10 days. We're going to be working and also enjoying a bit of what Dublin has to offer with some of the highest drinks costs in Europe. I'm not looking forward to that, but it did require saving. But also, to your point, through COVID, my partner and I sat down and we thought, jeepers, the world can change on a dime, and it really did. It shifted our minds, and with these shifts to more nuanced, more digital, more flexible work environment, what role do you see investment platforms like INN8 playing in supporting this new work of working?
Yeah, I mean, so something which is a mega trend in the background, certainly for South Africans, is we've noticed steadily since '94. Increasingly, South Africans want a portion of their wealth in foreign currencies and accessible offshore. And certainly the digital way of working supports that, because as long as you have an internet connection, you're able to get information about your investments, you're able to manage them. And if you're an advisor, and certainly if you're using our INN8 platform, it doesn't matter whether you're in Claremont or the Canary Islands. If you have Starlink, these days that's very fashionable to talk about global internet use. You're in control, and you can serve your clients and advisors. I mean, just like now, we're talking on Google Meets. Advisors are very empowered to be able to manage their clients' investments, any day-to-day transactions that they need to do, without any paper. We've got one printer in our office, and I think it's only busy when someone has the odd primary school project for their kids to print out. Other than that, we don't have any paper. I'm mentioning about digital ways of working, and something which we've developed at INN8 Investment Platform is that we've reduced the amount of rekeying in a very paper-heavy regulated industry. So while bank validations and FICA and all that happens behind the scenes, our financial advisors don't have to recapture any information that they've already given us. Making changes like tax numbers and addresses is really simple and goes straight through and happens in real time. So that's really helpful for financial advisors.
It sounds very much like the Capitec model, looking at the way things were done and being able to build it from first principles in a more digitally native, digitally first way. And it's incredible what we can do to remove a lot of that red tape, which really is laborious for the advisor. Now, the modern workplace has also placed a much stronger emphasis on employee well-being. And I recall during the COVID, the World Health Organization actually warned that post-COVID, we might see a second pandemic of mental health issues, and trying to balance the kids being at home, as I said, living at work, not working from home. I think this ties quite neatly into the rise of ESG investing. What opportunities do you see in the ESG space, particularly in the context of this modern workforce?
I think ESG is an interesting topic, Michael. I would say there's a mega trend behind ESG, which has been in place for a long time, and that is the rotation from actively managed funds into passive. And that's borne out in international markets as well as South Africa. And I think if you just go back to understand what active management is and the fiduciary responsibility that investment managers carry when they're holding shares on behalf of clients. And if you really think about active management, you should be reading those resolutions, going along to the AGMs and voting and exercising, being actively engaged with those shares that you hold for clients. And many asset managers in South Africa and abroad keep meticulous records of their voting, and also many of them publish those votes. Whereas passive investing is somewhat different. You still have the rights and responsibilities to vote on those shares, but typically you're investing along sort of default themes, and one of those might be ESG. I think that from a platform perspective, we look at ESG as a bit more like a thematic or a niche investment theme, something like a fund holding gold bars, maybe a good comparison. And so we don't generally make specific ESG themed funds available to a broader audience. But I think from a governance and oversight perspective, that there's plenty of regulation around responsible investing. In South Africa, we've got CRISA and CRISA 2. But while ESG investing has gained momentum, I think there's probably an equal amount of critique to say, like, what's the measurement? Who decides what a sin stock is or not? And how do you make capital allocations in an increasingly connected world, which, you might have a very green looking company, but you look at their supply chain and they're very not green. And so I think it's very difficult to make those sorts of decisions. At the end of the day, it's about valuation. Like, what am I paying for something today and what might I sell it for in future? And if there's a factor which influences that business case and that valuation, whether it's ESG related or not, then it must come into the consideration and weighing up of that investment case.
Yeah. And that's why I'm quite cynical of the ESG label. I think there's been a lot of greenwashing, a lot of marketing, when it should just be good investment process. If there is a risk that when you do a bottom-up due diligence on a particular company or a fund or a thematic, then you need to consider that in the long-term consideration as an investor into holding that company and whether or not it's priced in, or to your point around valuation. So, it kind of, everything is ESG effectively. And that's why I'm very cynical, shall we say, of those that are just particularly ESG funds. Now, we've also seen, back to your point, between active and passive, we've seen a compression in fee structures within the asset management industry. I think one factor contributing to this is clean pricing. So maybe you could just unpack what clean pricing is and how it's led to this fee compression.
Sure. How much time have you got? So let's go back a little bit. So there have always been banks, and then there were life companies, and then independent investment managers, and then LISPs. And then LISPs have evolved a bit to become platforms, and at the same time, the rise of discretionary investment managers, or DFMs. And each of these developments has had a knock-on impact on the fee value chain. Now, clean pricing comes from the old practice of paying rebates from fund managers to platforms. And it was really a price control. So in the old days, we had retail clients and you had institutional clients, like really big pension funds, for example. And often the investment managers just had one fund. And in order to give a different price to retail investments, because there's lots more costs that come with that, they developed this rebate mechanism. Now, that's really all gone out the window with clean pricing. So essentially what happened is we took the rebate out of the fund manager fee, and we said we're going to give you a clean fee. So the fee that you pay today, pretty much on every platform for almost every fund, is only for investment management for that fund. There's nothing else included in that price. And then you look separately at how much you pay the platform for their administration of that investment. And so I guess that's where the trend from clean pricing came from. It was supported by the internet, people getting access to really useful information at their fingertips and at a massive scale has forced a theme of transparency through investment management. And I guess at the same time, while everyone and their dog had access to information, customers in South Africa have also been fortunate that we have such a mature regulatory environment, a very competent and organized regulator, but also a passionate, professional, and responsible investment industry. And you can see this in, I call it the effective annual cost standard, which ASISA came up with several years ago. I was involved with that initiative, and it was really to be able for clients to compare retail products across the different providers and on a number of different fees. So your admin, your investment management, and your advice is all in one very simple table. And that was all prompted by this trend to move towards clean pricing and transparency.
Yeah. And I mean, that's ultimately what you're looking for as an end user. We don't want to see a race to the bottom where, the fees compress to such an extent that you're not attracting talent into the industry. But you need transparency. I think particularly, in the old school RA products that were sold in the market, some of them I still see, listeners and viewers come to me and say, look at this, Michael, and it's got a fee of 3.5%, 4.5%, which in today's world you just kind of fall over. But it really has been a very positive development for local investors. There's also this significant move towards LISPs, the linked investment service providers. What value do these bring to the asset management industry?
Correct. I'm just trying to simplify it as best as possible. In the old days, before LISPs, client had to go to Asset Manager 1, Asset Manager 2, Asset Manager 3, and have to open multiple accounts and then do a bunch of paperwork in the back, sort of consolidating all this information. It also became tricky when you tried to access tax wrappers. So do I open my RA with Asset Manager 1 or Asset Manager 2, etc.? And so what LISPs and platforms have allowed investors and advisors to do is they can hold one account or a handful of tax wrapper accounts like an RA, a living annuity or endowment for that matter, at one provider. And then behind that, they can hold any number of third-party asset managers that they like. So you don't need to open up multiple accounts in the first place. And then the platform takes care of all of your tax reporting requirements. So everything in one place, one tax certificate for each account, etc. At the same time, platforms bring some efficiency to the world of investment management, because I say we, because we're the platform. We do all the admin, we talk to the clients, we make sure that we've got all their information up to date, and the asset managers focus on just managing the money. And we do one or two trades in and out of their fund every day, whereas previously they were having to deal with all this high volume client retail administration, and that has certainly simplified the industry to a large extent.
And again, I think that's also been a big driver in clean pricing, if you think about it, and also compressing fees, giving you the economies of scale and the advantage that brings. I mentioned that you also have this relationship with one of the leading DFMs, and discretionary fund management is interesting. It's another evolution in the industry in South Africa. We see a few, I think just recently Alex Forbes launched its DFM. How has all of this impacted the sector, as well as the value that investors can expect now that you've got these large players with big institutional muscle helping the financial advisor, and what impact does that have overall, do you think, on the broader investor community?
Absolutely, and congratulations to INN8’s DFM. They've won some awards this week, which they're very chuffed about. I'm really proud of them. From a value proposition perspective, the DFMs bring order, consistency, and an objective structure to an advisor's investment process. And while previously advisors, so 20 years ago, they would have picked the funds which were most appropriate for that client's risk profile, and that worked perfectly fine. In today's world, you have so much more choice, and also the requirement around due diligence and a really well-structured investment process is very high. And I think the trend of DFMs providing those services to advice firms, and they provide sometimes different services. So some advisors like to retain ownership of the investment process, and they may buy research from a DFM. Other advisors prefer that the DFM perform that role of hosting the investment committee and the process. And so there's some nuance within that as well. But really, the professionalization of financial advice, advisors increasingly offering a holistic financial planning proposition for their clients, I think goes hand in hand with a really well-structured investment process to make sure that those outcomes are the best for clients.
And within that, when you look at it, obviously investors also need to operate within the existing regulatory frameworks. You mentioned we're very well regulated, some might say over-regulated in South Africa, but are there any regulations in particular that you believe should be maybe tweaked or changed for the betterment of the industry?
So one more point just to add, if you don't mind, to the DFM, is that I think that DFMs perform a very valuable role in holding investment managers to account and being very critical around process and people and consistency and consistent application of that investment management framework to the underlying client investments. And I think that's important to have these sort of objective checks all around the industry. It's not just DFM Asset Manager. There are many examples of those. But when it comes to regulatory frameworks, I think on one hand, we should be very happy that we, for example, in our banking industry, we sailed through, not quite, but 2008 in a relatively unscathed. If you look at the number of sort of really large corporates that went out of business in the US compared to here, we were very resilient. And that has to do with capital adequacy and all the good stuff but that doesn't just happen by chance. We have a very mature financial services industry. And so I think that's the one thing. The fact that we got onto the grey list and the level of work that has happened to try and get us off that, and I'm really hoping that is imminent, that we get off that grey list, is testament to sort of the professionals within the industry who are working for that change. We wouldn't have been able to do all that work if we didn't have some of those existing regulatory frameworks. And so when you say, like, what should we change for the betterment of the industry, I would rather say, like, which frameworks are the most useful, and how do you apply those in real world circumstances so that the existing regulations benefit clients the best? I think that's what I would rather say. I think it's difficult to cover the full range of different frameworks, but know your client, all the phase stuff. I think those are all excellent frameworks. I would, every time I meet with a regulator, I ask them, please just don't introduce any more frameworks. Like we're already sort of coping with the existing lot, and maybe two-part is a good example of that. I think over the long term, it's going to be a phenomenal benefit for an increasing number of South Africans who will approach retirement with way more than they would have had we not had two-part. And so it was a very difficult rollout and development for the industry to cater for that. But I think in terms of important regulatory changes, probably one of the best things we could have done as a country.
And to your point, I mean, the quid pro quo for dipping into that 1/3 is mandatory preservation of 2/3. And the outcomes over the long term will undoubtedly be better. But looking at what the industry had to do behind the scenes and the DevOps that had to go into, turning these funds into far more engaging transactionary type operations, now that we've hit the go date, required an awful lot of effort. Interesting on the regulation, I do think there's a bit of overlap in the industry where, we introduce KYC and treating customers fairly and all of this. Yeah, I get your point on the FIC and the grey list and getting us off that grey list. But I think over the years, some of the regulation has bled into the other pieces of regulation. So there's overlap. So one almost gets the sense that an all-encompassing review to get rid of some of the overlap and keep, to your point, what really works, probably would be welcome, I think, more broadly. Just lastly, tell us about INN8’s investment platform a little bit more. What is it exactly that you do and that differentiates you in the marketplace?
Thanks, Michael. This is the part where I get to punt my product. Look, it's been 7.5 years. It has been one of the most rewarding experiences to try and reinvent and change the way investments are done in South Africa. And the INN8’s investment platform certainly attempts to do that. Who are we? We're the advisor's partner. So we spoke about the role of platforms. So increasingly, we're not a LISP. Platforms are the place where all the sort of the complexity that is involved with administering retail investments comes home to roost, and we take care of all of that. And so we want advisors to do their best job. We want them to show up and give the best advice, see to their clients, make sure that they are achieving their best outcomes, because that's what makes us happy. What makes us special? I think there's a couple of parts of our proposition which make us special. Being digital in the first place. A small example: if you navigate your way through different journeys on the website, these are all tailored to that specific circumstance. So if you are starting a new living annuity, we're not going to ask your age of retirement. So we've customized all the journeys to only request the bare minimum that the advisor needs to put in information-wise. And so that's what we do. We try and remove the number of clicks, give you just the right amount of information that you need at each point, and at the end of the day, help you, the advisor, help your client. Like, that's really what we're here to do.
Yeah, and I think a big part of that then really brings that value proposition home in the advisor-client relationship, because a good advisor should be giving that absolutely tailored advice. They really shouldn't be bothering with a lot of the background, very laborious administrative work. They should be getting to know their clients, understanding exactly what it is that they want to do in this changing world that we spoke to. Now that we're thinking a little bit more deeply about what our purpose is, what we want our money to do for us, rather than just the traditional, into work and you start saving for retirement. I think that conversation has completely changed. Michael Summerton, thank you very much for joining us and shedding light on how you've built this investment platform to adapt to a very fast-paced, changing, modern investment landscape and modern workplace as well. Really enjoyed having you on Business Talk.